Bridging Trends. Brought to you by MT Finance. For the third consecutive quarter, Bridging Trends contributors reported a rise in bridging loan transactions, with Q3 up to 214.7 million. This was a 20% increase on Q2 and 13% up on Q3 2021. There was a slight change to the transaction split between first and second charge bridging loans, with first charge increasing from 83.6% in Q2 to 86.2% in Q3. This could have been down to the rise in bridging being used to prevent chain breaks. Regulated bridging finance was still in high demand and took 45.2% of market share, up from 43.3% in Q2. This is the highest figure we've seen for regulated bridging since Q1 2021, when we were in the midst of the stamp duty holiday. After 2 quarters of falling interest rates, they finally started to rise slowly from 0.69% in Q2 to 0.73% in Q3 as the cost of borrowing increased across the financial services industry. This is still relatively on par with the 0.72% figure we saw in Q3 2021. Considering the increase in interest rates, it was expected that we'd also see a rise in the average loan-to-value in Q3. As predicted, it went from 56.1% in Q2 up to 59.6%. For the fourth quarter since Q3 2021, the average term of a bridging loan was 12 months. Once again, a busy property market impacted industry professionals who experienced a continued demand for their services. This resulted in the average completion time being pushed up from 57 days in Q2 to 60 in Q3. It was all changed when it came to top criteria searches made by bridging finance brokers in Q3, according to data supplied by Knowledge Bank. Expatriates took over from regulated bridging, followed by family gifted deposit, and finally flats, not new build. Purchasing an investment property, which was the most popular use of bridging finance for the 5 previous quarters, fell by a third, from 24% in Q2 to an all-time low of 16% in Q3, as buyers took stock of the current market. Preventing a chain break instead became the main reason, rising slightly from 21% in Q2 to 22% in Q3. Business purposes also increased, soaring from 6% in Q2 to 11% in Q3. The latest Bridging Trends figures show that an increasing number of buyers are utilising bridging finance to prevent chain breaks on both residential and investment properties. While it's too early to see the impact of September's mini-budget just yet, it's likely that the next quarter will be more reflective of borrowers' reactions to it and the impact it had on high street lenders. Bridging Trends.